The following content is meant purely for educational and informational purposes and should not be relied upon as financial, investment, legal, tax, or any other professional advice. This is the Fundamentals podcast, where we demystify crypto and help you navigate this ever-evolving internet-native economy. In this episode, we're joined by Cosmo Jiang, a portfolio manager at Pantera Capital, to discuss the details behind Pantera's largest investment ever into the Open Network, or TON, the Layer 1 network originally designed by Telegram. We speak about Pantera's long-term approach to fundamentals-based investing and walk through their typical deal sourcing and due diligence processes. We explore the factors that helped Pantera build conviction for their largest investment to date, including the strategic partnership between Telegram and TON, how TON is uniquely positioned to onboard the first billion users to crypto, the importance of a thriving user and developer ecosystem, the impressive traction that mini games have been seeing on TON, and the growth of stablecoins on the network. We also speak about Pantera's bull case for TON, the risks and unanalyzables related to this investment, and how Pantera is supporting TON's growth post-investment. Tune in for a great episode on the fundamentals of both Pantera and TON.
Hey, welcome to the Fundamentals podcast. It's great to have you on, Cosmo.
Hey, yeah, thanks so much for having me. Glad to be here.
Of course, I wanted to ping you, I think it was a week back, about TON, because that is an extremely exciting ecosystem right now, and there's a lot to talk about. And of course, at Pantera, you made your largest investment into that ecosystem, so I wanted to kind of break that down because I'm sure there are a lot of questions and people are excited to understand the actual thesis behind it in more detail. But before we start diving into that, I think I'm quite familiar with your work, listening to all the conference calls, etc. But for just any listeners who might not be familiar with you, could you quickly give us a primer into who is Cosmo?
Yeah, sure. Well, look, I'm Cosmo. I'm the portfolio manager responsible for our liquid token strategies here at Pantera. So for the TradFi folks, that's everything that's liquid or publicly traded, which means I work closely in partnership with our founder, Dan Moorhead, who has a very storied career in macro trading from Tiger Management, early pioneer in blockchain, and Paul Veratatakit on the venture side, who leads our efforts there. You know, before devoting myself to this asset class full time, the majority of my professional experience really has been in traditional assets. Backing up just a little bit, I grew up in the town of Cupertino in California, and so I've always been surrounded by innovation and tech. Left California, fortunate enough to go to Harvard for college, where I studied math. And at that point, I still didn't really know anything about investing, didn't really know what I wanted to do, but enjoyed learning and surrounding myself with smart, growth-oriented people. And so the natural place to channel that energy, or where I was told to channel that energy, is in finance. So started my career doing M&A at Evercore, which is one of the top boutique banks in New York, and then moved over to the private equity group of Apollo, where really got my first steps of understanding what it really means to be an investor and really own businesses. And then made my way over to Hitchwood Capital, which is a very classic long-short equity hedge fund, very growth-oriented, directional, and long-term focused. Towards the end of my career there, I managed all our exposure across consumer internet. So that means everything from your brick and mortar retailers like Costco or Dick's Sporting Goods or Macy's, to the large tech companies that were disrupting them, like an Amazon, a Netflix, a Facebook, Google, or the higher growth disruptors like Etsy or Uber or Carvana or DoorDash. And so it's sort of with that consumer internet investing mindset and lens that I really approach digital assets. And frankly, why I think digital assets, crypto, is just so interesting, right? For me, I think the number one thing I try to get across when I talk to people is that I really believe tokens are a new form of capital formation. A lot of businesses will never have a New York Stock Exchange listed equity. They'll only ever have a token. That's how they align incentives with employees, management teams, token holders, or the equivalent of stockholders, and very uniquely to crypto users. And, given that capitalism is all about incentives and incentive coordination, I think tokens are a very disruptive coordination mechanism. And so as I was digging into my consumer internet coverage space, I just started to realize that, wow, there are actually a lot of businesses that have the opportunity to disrupt these large Web2 giants. And so as I went down the rabbit hole, I really fell in love with the space, fell in love with the energy of the space, and decided to devote my career to digital assets full time.
Awesome. Yeah, I definitely agree with you on that. The tokens are a new form of capital formation and also just like resource coordination at a scale that we've never seen before. So it's great to see. And then on Pantera, then, because Pantera is quite a pioneer in this space. In 2013, launched the first ever blockchain head and venture funds in the United States. Could you maybe also walk us through very briefly kind of the fund story from founding until today? And then it would also be interesting to hear how your paths kind of crossed.
Yeah, absolutely. Look, so Pantera was founded by former Tiger Management head of macro, Dan Moorhead, and in 2003. Tiger Management, obviously the original maybe hedge fund that really took off in the 80s and 90s. And you started in equities, became macro over time. And so when Tiger Management ended up shut down in the early 2000s, it created this diaspora of really high quality managers who started their own funds, the Tiger Cubs. And so, Dan started Pantera in 2003 being a macro oriented fund. And then in 2013, he actually fully pivoted to being a fully blockchain dedicated fund. And, we ended up being one of the first, or I think the first in the US institutional investment firm focused exclusively on blockchain. Just really seeing that, wow, Bitcoin really could be the future digital gold. And this is such a huge opportunity. Our original Bitcoin fund, I think, has returned 1,000x or something. And so our early investors from 2013 are obviously very happy. Today, we have the full spectrum of exposure to the space, including private venture vehicles. Our flagship venture vehicles is actually a crossover venture and liquid fund, our liquid token hedge fund, as well as some passive products, including that original Bitcoin fund. Our philosophy is really genuinely investing in the long-term future of the digital assets industry and really riding the industry secular tailwinds to compound capital over multi-year time period. I joined Pantera last year. Before that, I had left my prior hedge fund and actually launched my own digital assets hedge fund called Nova River, really trying to, in my mind, I think there's a real opportunity to build the next Tiger or the next Viking or Kotu in crypto and really apply that rigorous fundamental analysis that hadn't really existed in a meaningful sense in the industry to date, and really try to be on that vanguard of popularizing or making the notion of fundamental investing more well known. Soon after launching, I was fortunate enough to launch with a lot of supporters who trust me with their precious capital, and then ended up realizing it made sense to join forces with the guys at Pantera. And so we sort of merged our entities, and I lead the liquid investing efforts here. I think really for me, the decision has always been, how do I maximize, the best investment outcome that's possible for my partners? And I think a lot of that comes down to, and the reason why joining forces with them, Pantera then made so much sense is, one, like, I do think there's massive information synergies that you get from being part of a platform that's been around for so long. We've been investing in crypto since 2013. And so we have an incredible network and incredible resources to bear to invest in this space. And the sharing of deal flow on the private side and the understanding of public markets is just really important to invest in a space that is pseudo-liquid, pseudo-hybrid across both asset classes. The second is, the opportunity to really take this platform and educate investors what fundamental investing really means and how we can apply it at scale, I think is something that has been somewhat missing in our space. And so the ability to do that at a larger scale, I think is very important for our strategy as a fundamental investor to succeed, but also for the industry as a whole to succeed.
Yeah, thanks for breaking that down. Completely agree there. And that's why it's been a joy to listen into all your conference calls and read all your research as well, because this fundamental approach is something that we're very aligned on here at Token Terminal as well. And sometimes it feels like a bit ahead of our time in this because people aren't paying enough attention to it. But when you have the goal of maximizing outcomes like you do, I would like to believe that over the mid to long term, the focus on fundamentals is the killer approach there. So definitely working on the right things. Now, to start breaking down into that fundamental approach here, let's speak about TON, because Pantera made its largest investment ever into that ecosystem quite recently. Could you preface this just by walking through what the primary factors really were that initially drove you to explore the TON network?
Maybe I'll step back and give a little bit of context of how we came about this. Telegram is obviously something that a lot of people know. It's the third largest messaging app across the world, only behind Facebook Messenger, WhatsApp, and WeChat. And so clearly it has a really strong, really huge distribution channel and a moat and a network effect. Telegram has been something that I've personally followed as a consumer internet investor for the last decade, right? I've seen the growth of Facebook. I've seen the growth of Snapchat, Pinterest, all these competitors, and Telegram. I've come to the realization that messaging apps actually are very special and have incredibly high retention, or they just happen to be very hard to monetize. The messaging apps are probably something that you open up the most on your phone every day. iPhone, I think most of the retention of iPhone users is probably attributable to iMessage. The reason why people love Facebook now is really for Facebook Messenger. Snapchat, which people in the US sort of think is sort of the silly thing, has had incredible staying power because it is the messaging app that young people use. But the monetization part is hard because messages are inherently a little more private. Generally, people feel uncomfortable sharing that information. And so it's hard to do ad targeting. And so it's very hard to monetize, which brings us to, I followed it for a while and haven't really understood totally what the business model might be over time. TON, on the other hand, is something that Pantera as a firm has followed for many years as well. All right, TON has a blockchain that started a few years back during the little bit prior to the last bull cycle. And it's something that's had itself a mixed history and has had to go through these new iterations over time. TON was originally started by Telegram or developed by Telegram. But Telegram ended up having to disband or disown the project because it was sued by the SEC for raising capital for, an unregistered security. And this was at the same time that all the other large social media companies, very famously Facebook, had to ditch its DM project or its own blockchain project. And so Telegram, effectively gave ownership of the TON network back to users, and Telegram fully disowned any ownership in the TON network. And so at that point, this space with some people who are kind of interested in it, but really hard to coordinate without a lot of resources or centralized dedicated attention that like Telegram or others may have had. Fast forward a few years, now we think the story is very different, and we've gotten to a place where actually things have meaningfully changed. In September of last year, TON announced that they had reached a new strategic partnership with Telegram, and Telegram has since rolled out native in-app integrations, such as a TON wallet, such as paying with TON to buy ads on Telegram, such as doing in-wallet or in-app ad revenue share in TON. And so all of a sudden, this theory that TON could sort of have this relationship with Telegram actually became real or became concrete. And so that's very exciting, right? Being able to marry this Telegram 900 million monthly active user base and having them direct those users into the TON ecosystem could be very powerful for growing the distribution and the usage of TON as a blockchain over time. So it's really that, if you boil it down, it's really, we think TON has the potential to become the largest crypto app and onboard the most new users because of Telegram's massive distribution advantage and this very special relationship that these two apps have.
Got it. That's a great preface. Now, would you say that it was that strategic partnership with Telegram and that coming back to life that made it hit your radar and want to start diving into it deeper? Or was it a bit later on when you started seeing some initial metrics and activity happening on TON?
Yeah, that's exactly right. Everyone has always sort of known that TON is related to Telegram, or it was sort of unclear how they were related, perhaps, but only really until that point last year that, oh my God, maybe there's actually something going on. And that's when the light really clicked for me. I was like, I followed Telegram forever. We kind of have this history of TON at Pantera. We should really start understanding what's going on. I think the biggest question has always been, why now? In theory, this could have always happened. And so why are they doing it now? Why should it matter now? We've seen a lot of other, Web 2 applications or Web 2 platforms get a leg into blockchain, but not be very serious about it and therefore not really coming to fruition. And so a big part of our diligence was just understanding the relationship and the backgrounds and why this was happening. And the why now became very clear to us at the beginning of this year when Telegram did start launching its in-app wallet, and its in-app wallet is in TON. And so that all of a sudden became clear to us, oh, I get it now. Like they are actually, well, it's not that I get it now because we've always understood the thesis, but we're actually seeing the proof in the pudding of, wow, like TON is actually fully integrated with Telegram now. So it's actually happening. And that's what got us really excited. And as we dug in, we started to understand the motivations between both parties. TON, obviously, the motivation is more clear. They just need distribution. And so they'd love to have Telegram's distribution. From Telegram's perspective, I think is where it's really interesting is that I think TON's success is actually critical to the sustainability of Telegram as a private entity. And a lot of this comes from, again, my background as a consumer internet investor and understanding how social media companies have historically monetized or not. The reality is Telegram has always had this emphasis on data privacy, user sovereignty, not selling your data. And because of that, like they just can't sell ads, right? Like if you don't have data, it's really hard to sell ads. And ads have been the way that almost all social media companies have monetized over time. And so unsurprisingly, Telegram has not been successful in monetizing ads or developing a real business model. They launched subscriptions, which was somewhat successful, but like not enough to really, same with ads. And so it feels like to me, or it like the logic suggests to me that the only sustainable way for Telegram to actually monetize its platform is perhaps through crypto and perhaps through this TON distribution and being able to monetize through the massive platform. I think the reality is that Telegram, there are lots of stories about Telegram wanting to go public. I think that would be great for TON if Telegram did go public, but it's also possible that Telegram doesn't have to go public if TON really succeeds. And if Telegram doesn't go public, frankly, that's better for their philosophy of user sovereignty and data privacy because they're less subject to public scrutiny and the quarterly reporting mechanism. And so once we really start to understand that, wow, actually Telegram is not just like monetarily incentivized to make sure TON works, and historically relationship-wise incentivized to make sure TON works, but actually very strategically like core to its vision aligned with making sure TON works.
I think that's a really interesting point that Telegram needs TON and TON needs Telegram. So that relationship goes both ways. So it seems like the foundation is really there to build something pretty cool on. I'm glad you brought that up. Now, next I kind of want to start speaking about what got you to build up the conviction to make the biggest bet that Pantera has made to TON. Maybe before that, just a step back quickly, if you could outline how Pantera's typical discovery and due diligence process looks like. And let's speak about that to the extent of how it relates to liquid tokens, because that's the case it's on here. And there's a pretty big difference between early pre-seed and seed stage venture deals versus liquid deals. So I think that would be some great context before we dive into how you build up the conviction for TON.
Yeah, definitely. I think, look, to take us to give the framework or to maybe state the obvious, we are very focused on investing in blockchain-enabled businesses and protocols that provide a service that has product market fit, strong growth prospects, and led by a strong management team, and has the ability to eventually capture and create and capture economic surplus, right, and create value effectively. Depending on the stage of the business or the stage of a protocol, like what we're looking for, it can be very different. On the early end, our venture team is really looking for really strong management teams with a clear vision and a clear, crisp messaging, because what matters the most at the early stage is building that initial product and finding that initial product market fit, but also importantly, like recruiting talent that helps you get to that point. And so that's why management is just so key in the early stages. Management remains key forever, but as a business grows, you start to think a lot more about what is the product, what is the moat, what is the differentiated edge that this team has built and has the potential to. And very crucially, do they have a plan to make money doing that? Because if they don't have a plan to make money, fantastic, power to you, but I have no interest as an investor. I'm not investing in nonprofits. As far as what our process is then, I think it'll sound very familiar or very similar to what people see in traditional asset classes. What we're looking for is we're trying to find special products that have found product market fit. And the way we do that is by talking to customers, talking to competitors, understanding the competitive landscape, understanding really what is this business providing and what is the value add that they have. A lot of times that boils down to the unit economics of the business. And then trying to understand, if this does succeed, what does that look like 5 years from now? What is the value creation here 5 years from now? How big can this get? And that's, tethered on both the individual company's plans, but also what we think could happen and what are the real world examples of that we could use as case studies for where this could go. So as we think about TON specifically, because it's a little further on and because it's a little bit more mature, at least more trackable with fundamentals that we can track, what we care then a lot about is tracking those fundamentals. I do care deeply about what are the top line KPIs doing, such as transactions, users, the usage, where's the usage coming from? Then, ultimately that boils down into a financial model. Coming from a traditional finance background, I care deeply that everything we do is grounded in numbers and grounded in fundamentals. And so we build, the equivalent of 3 statement models for all our large positions. We write, 15, 20-page memos, investment memos, write-ups with all that research that we've done. And then we have a very active process of once we made an investment, or once we've done all that work, it's about translating that into portfolio construction. So, where does that fit amongst the types of exposure that we have in a portfolio? How do we size it relative to our conviction in that idea, as well as how timely that idea is? And then thirdly, once we make a decision to invest, it doesn't really stop there. It's like, how do we really create value and add value to make sure that we do succeed and to, create our own outcomes? And that's the very venture private equity mindset of we're investing for the long term. And so we really want to do everything we can to help this business succeed. So those are really the broad overarching, how do we think about investing and how do we do diligence on a protocol? And so, that's, we've done all that on TON and came to the conclusion that, wow, TON is actually really exciting and we can do a lot here.
Yeah, that's great. So it's the balance of a lot of qualitative considerations that you need to have at this early stage in an industry that is at such a nascent stage as well, that you can't find like exact examples or case examples from something that's happened before, but then combined with strong quantitative analysis based on the data that you have available.
Yeah, I think some mistake that people think about when people think about fundamental investing, I think, or value investing perhaps, I think the mistake that a lot of people make is that it's like all about the numbers, and it's really not. Investing is about the fundamentals doesn't mean numbers only. It really means everything. Because at the end of the day, businesses or protocols are just collections of people. Like we're collections of humans. And so it's all about the human interaction and how we coordinate those humans to create value. Yes, like that translates into numbers eventually, and you need to know what the numbers are to get to a sense of, I think this should have X dollars of earnings power 5 years from now. But it is really a collection of tracking the data to make sure that the narrative and that the fundamental story, which is the humans working together, is tracking what you want to believe.
Definitely. It's just a collection of humans. I think one of my favorite theories is actually the nexus of contracts. Don't know if you're familiar, but just that every single company and corporation is actually just a collection of contracts between different parties. You have primary shareholders, directors, employees, contractors.
Yeah, well, I guess whether it's a legal contract or a social contract, both. Yes. Yeah.
Exactly. That's cool. But so given that framework through which you approach assessing the fundamentals, what were the key takeaways from your research into TON that then built up your conviction to make this biggest investment that Pantera has made to date?
Yeah, I think look, the key question is, can they get from what was really only 1 million monthly active users on TON, and can they get to the next billion users in crypto, right? I think a lot of people ask, or we're always trying to find, and a lot of people are always trying to find, what is that application that can get us, or how do we get to that first billion users? The reality is today we have tens of millions of users across crypto, maybe not even that. And so we are a drop in the bucket of the world. Like, how do we get to a billion users and really have broad adoption? And so it came down. And so here the question is then, does TON have the ability to do that? And we think it has maybe one of the highest potentials to do that. How do we get comfortable around that is understanding Telegram's, a user-based growth. And over time, we have a long time series of what Telegram's users look like, where Telegram's users are, map that against where those users, map Telegram's users against, potential blockchain users and where the highest use cases might be in blockchain. Happens to have a high overlap because it is so EM focused. Understanding where Telegram's users might go over time. And then looking at TON's users, like what is TON's penetration of Telegram today? Why is it so low, right? It's only 1 million MAU. Well, today TON has gone to 4 million MAUs over this short period of time, relative to 900 on Telegram. Why is that? What are the steps they're taking to increase that penetration of TON as a percent of Telegram? What are the products they can release? Or what are the small growth drivers or growth hacks they can use to get that penetration up? And then it's thinking about the monetization, right? So that's the user part. And then if we have users, next to diligence is like, how do we actually monetize these users? We looked at how do various other applications monetize users within crypto or outside of crypto. What's the right, there are a lot of examples you can do there, whether it's DeFi or whether it's, think about transaction fees or MEV, that a lot of which is generated from DeFi, or payments, like what if it replaces payments? How big is that? How big is that TAM? And then on the social media side or the Web2 side, can they bring advertising or can they bring like B2B type or BTC type commerce onto TON? And like how big could that ARPU be or how big could that TAM be? And then, you get to this reasonable assumption perhaps of how monetization looks like over time. And then you have to really understand, we have the history of being invested in crypto for a long time. So understanding the competitive dynamic, like why should TON win over the incremental user developer? And we do that by talking to tons of developer teams all the time as part of our normal course of work, but also specifically in the TON ecosystem. What do people dislike about the TON ecosystem? What could be better? What are the opportunities to increase developer adoption? And ultimately that translates into user adoption. So I think it's marrying all those three pieces and ultimately culminating that in a model of what we think the valuation outcome or the price target might be on this network over time.
Got it. And I want to dive into maybe a couple of the verticals that you outlined in your investment announcement point in more detail, with the first being the focus on community and the importance of that and TON's position in being tapped into Telegram and having that potential 900 million users. Because to paraphrase your announcement post, most blockchain projects are tech ideas trying to create a community, whereas Telegram is a community integrating blockchain technology. I wanted to ask you why you believe that Telegram is better positioned than other community platforms out there to actually succeed in integrating blockchain technology into the user experience?
Yeah, that's a really good question. And I think actually maybe a point I missed just now, which is the first largest point and the first thing we diligence is actually that Telegram relationship with Ton. Like, why on earth should Telegram care? Right? And I think that understanding that insight of why Telegram cares, which we talked about briefly, is actually the whole thing and everything about why Telegram might succeed, whereas others didn't. Telegram is actually the only large social media platform that has a blockchain strategy now. Facebook has been forced to exit. WeChat obviously can't do it because they're in China. Google has been a failure in most social experiments. And so Telegram is the next largest. And they're the only large Web2 platform that can have a blockchain strategy because they're not in the US, they're not in China, they're in Dubai. And so, I'd say that all the other Web2 platforms actually really want to, but they can't because they feel hamstrung in a regulatory sense. So that's very cool, right? Wow, this is the only social media platform that can attack the web, that can attack the block opportunity. And so that frankly makes them better positioned. It's this, they don't really have a legacy business they're disrupting, for better or worse. They don't have the same regulatory pressure that others have in US and China. And by the way, they still are at massive scale. And then strategically, going back to the point I made before, the insight really is that being a blockchain company or monetizing through blockchain is actually totally in line with the ethos and the whole founding story of Telegram. Telegram's whole thing is user sovereignty, data privacy, and that is also, by the way, the ethos and the philosophy of crypto. And so maybe it's no surprise that Telegram started Ton way back. And so that philosophical alignment, the fact that they're the only ones that can do it from a structural perspective, both of those I think are very powerful and why Telegram is better positioned than anyone else to make this work. From a community perspective, I think the question is maybe a little different. I think a lot of people, a big piece of the misunderstanding perhaps with this investment opportunity has been that the crypto natives and the people in crypto, we feel very strongly that all the strong developers and a lot of the activity is on Ethereum and or Solana. And so, how could something like Ton succeed when there, frankly, just aren't very many developers or aren't very many crypto native people there yet? My answer to that is, look, I'm grateful. We obviously are invested across a lot of things in Ethereum. We are obviously very large investors in Solana and the Solana ecosystem. But the reality is, we are just so early in the crypto penetration story that I'm glad that these have burgeoning communities. But frankly, starting from zero versus starting from 2 to 5 million daily active users is not that difference in scope relative to we're all trying to get to 1 billion. And so in that context, yeah, Ton is like earlier. It does have Telegram itself has a very passionate community, but it is smaller. It is earlier stage. But in the grand scheme of no one has even close to 0.5% of penetration, everything is early stage. And so everyone's community, great, let's keep building everything. But I'm not too worried that Ton is even earlier than perhaps Solana or Ethereum.
Yeah, I think the first billion users is not going to come through the current UIs and UXs that we have either. It's going to be very abstracted in a way that I feel Telegram is in a position to do quite well. Even though right now I feel they're not promoting blockchain integration, wallet integrations, or anything else too much on the normal Telegram UI, which is interesting. It's so easy when you go to the search and type in wallet to set it up. A few clicks, one of the most seamless ones in crypto right now that I've experienced. But still at the same time, it feels like they are not pushing it onto that mass user base that they have and then being pretty careful, which I feel is quite important.
Yeah, I mean, look, I think the reality is the end experience for users will be they don't realize they're using blockchain rails, right? Otherwise, it's just, it's too complicated. People in crypto seem to, I think, like to over-index, or a lot of people in crypto historically have liked to over-index on complexity and like how cool this insane new tech that we're developing is. But the reality is users don't care. All right, users just want something that works. And slowly more people are coming to that realization, yet we still get this thing where most blockchain teams are focused on really minute infrastructure improvements that frankly don't matter to the user. And so I'm happy actually, and I'm glad that Ton is going about it in a totally orthogonal way. We as a portfolio, Pantera is obviously very invested across all these other blockchain ecosystems, and we actually really enjoy that and appreciate the diversity that Ton gives us in their go-to-market, right? Ton's go-to-market is very explicitly not blockchain first. It is user first. It is user interface first. And so that sort of very, differentiated go-to-market, that orthogonal go-to-market relative to the rest of our portfolio we think is very attractive.
I think one market sector that falls into that category of trying to build a UI that doesn't to the end user feel like crypto in any way has been gaming. And there's been a lot of talk over the previous cycles of gaming would be the one to crack the first billion users and have that. But we just haven't had that outlier successful use case yet. But now on TON, we're seeing some mini games being launched on Telegram. And of course, as in everything, you have mercenary users, but at the same time, the amount of users we're seeing right now is something we haven't seen before. So that's a pretty interesting trend to follow on TON right now. So how do you personally envision gaming applications on Telegram overcoming the common issues that Web3 gaming has had over the past years, such as, unsustainable economics and poor user experience?
Yeah, look, I think there are two questions there, and I'll try to attack both of them. One is like, why has gaming not worked? And two is like, why should gaming on TON work? I am very bullish on the idea that gaming and using blockchain rails makes a world of sense, and I would fully expect that more and more games sit on blockchain rails in the future. I do think though the emphasis on games of the past, and I don't think this is any fault of theirs, it's just early innovation, is that games in the prior cycle were very focused on play to earn, which is great, it was really cool, and then people started to realize that that's not sustainable. And when you take a look, it's pretty obvious why it's unsustainable, which is that if you take a systemic approach or a societal approach, an economy is based on, for an economy to grow, there has to be more value created in the ecosystem or more inputs than there are people taking value out of the system. And so what does it mean for a game, or taking that analogy to the game? There have to be more people willing to pay money to be part of the ecosystem or to add value into the ecosystem than those who are taking money out of the ecosystem. So, the play to earn people are the guys who are taking value out of the ecosystem. There needs to be enough players that are playing because it's fun, playing because they want to be part of the community or gain some sort of utility from it, that they are putting resources into the ecosystem. Some of those resources can be in the form of time, but more often monetary. And so how do we get people to put resources into an ecosystem? It is if that game is actually fun. And so, unsurprisingly, the prior games of Fire Cycle were not fun, but today's games are getting more fun. And so I have a lot more conviction that, as more and more Web3 gaming teams, who have been around longer, who have perhaps have a lot more experience developing traditional games, start building out games in crypto, they will hopefully be fun. Hopefully they'll abstract away the complexity of blockchain rails and just focus on the game. And eventually it'll form a sustainable economy if more people want to play, right? And they want to pay to play. As far as TON goes, TON has seen incredible success with adoption of its games to date. Notcoin, which was one of the first games on Telegram, reached 10 million DAUs within a couple months. That itself is already 5x what Axie ever got to at its peak. And so, think about that. Like, we were already at many multiples of any other blockchain game and the most successful blockchain game of the last cycle. Hamster Kombat is at 200 million unique users and maybe 40 million daily active users. So 20x what Axie Infinity got to last cycle. So it's hard for me to overemphasize how incredible the traction has been on TON relative to anything in crypto, period. The reason for that, I think, is it goes back to what you mentioned, which is that the UI is just so seamless, right? The fact that you can open up these Telegram mini apps so easily in the Telegram app, the fact that I know from my experience investing in social media companies, messaging apps, that messaging is one of the things that people open up the most number of times a day. And so that's top of mind. That's the insight for which WeChat became so successful with their mini apps. Telegram has that too. And so maybe it's not so surprising that these 900 million users, a lot of them end up opening these games and keep it open in their Telegram wallet or in their Telegram app. And it just really speaks to or validates our thesis that Telegram has this distribution advantage and can use it to drive adoption of TON.
Yeah. And this momentum, when I've been thinking about where I've felt this before, feels somewhat similar to, the Farmvilles and the likes that you had on Facebook and mini games back in the day. Mm-hmm. So that's definitely like a benchmark that this could work, and it seems to be working quite well.
Yeah, I mean, look, there actually are a lot of games that people play a lot on WeChat, and so it's maybe less familiar to people in the US, but mobile games are the largest growing segment, or by far the largest growing segment of gaming. Gaming itself is the largest growing segment of media globally, and so there's just massive tailwinds to mobile gaming. And I think something that I'm sure people will come back to this and say, hey, Notcoin is actually not a really simple, stupid thing. Hamster Kombat is like just a clicking game. Like, how could that possibly be fun? I would just point out, and this will surprise a lot of people, that idle games, which are games where it actually is very low brain power, where you're not doing much, are the most popular category of games globally, period. That has been the fastest segment of gaming. And so to say that, to look at TON gaming and say that these are silly things that don't have a lot of meaning, the reality is that is the fastest growing segment of gaming outside of crypto. So it just so happens that, you have to understand gaming to realize that's true. And so I would not, yes, like TON gaming today is like, kind of underdeveloped. These are kind of simple games, but, frankly, those are the fastest growing forms of games. And we shouldn't poo-poo it because that's actually very meaningful in how a lot of other gaming companies are built.
Yeah. What makes it popular is that I could be playing Hamster Kombat right now while interviewing you, and you would notice it wouldn't interfere with my interview.
Yeah.
I might be.
Yeah, exactly. Or in between, like that's the power of having a mini app in a messaging app is you're texting friend number one, and then while you're waiting for friend number one to respond to you, you maybe open up Hamster Kombat, tap a little, you see a message from friend number two, you message back, maybe get for friend number one, and in between, you're playing Hamster Kombat. And so you're always on the app and always stay within the app.
Exactly. So gaming is massive. And one thing we've been discussing internally at Token Terminal is like TON for Telegram is their way of making Telegram a developer platform that plugs into their distribution channel, and people can come build games, which is very lucrative for developers and builders to come in once it gets to immediately tap into that distribution. And on the other hand, it could also be their way of moving towards becoming a financial services company through payments, through stablecoins as well. So I wanted to hear your thoughts about that as well, because if we look at TON's communications, they've said that one of their goals is to put USDT on TON into every pocket. Well, they're quite well positioned to do that. And we've seen with another ecosystem like Tron, how well they've been able to roll out like USDT for daily transactions, small transfer volume transactions in countries where you can bank the unbanked. And with TON, the current outstanding supply is somewhere around $600 million, which is growing quickly, up like 35% over the past month. But how are you thinking about this payments layer on TON and how important that is in general for what's going on there?
Yeah. I think there are a few things to talk about on payments. And you mentioned a really great stat, which is how fast TON is growing, which is, they're at 600 million USDT that has been issued on TON, and it's growing very fast month over month. I think another stat that maybe has gone unnoticed is that it's actually the fastest growing chain for USDT adoption in Tether's history. And so it just shows the power of distribution, right? Tether only launched on TON in April. So it's only been a few months. And so we're very early in that stablecoin adoption story. I think the other point to be made here is that for a blockchain to take off, you do need a few basic primitives, one of which is very importantly stablecoins. The advent of stablecoins is really what helped Ethereum DeFi take root. And so it's very clear that people want to trade in, non-volatile assets or settle in non-volatile assets. And so stablecoins are hyper important. The second thing that's very important is, or other primitives that are very important are obviously exchanges, of which do exist on TON, as well as bridges, which I think we're still a little bit early, but more and more, I do expect to see a few large bridge integration announcements on TON soon. So, which is to say that, this has been the fastest growing chain for Tether, yet it still doesn't have some of the very basic primitives like, easily functioning bridges. And so imagine what happens when that does happen. The reason why payments is important, so that's why stablecoins is important. The reason why payments are important is that payments are very core to what we do. And I think what we've seen over the last 20 years, at least in US internet or consumer internet, is that at first the user acquisition strategy used to be to go through social media networks and to create this social media content as a means of creating a network. The most successful growing networks over the last few years have actually been fintech platforms. And that's because we found that the stickiness created by fintech platforms is actually higher. And fintech platforms, meaning your Venmos, your PayPals, where you can do peer-to-peer payments and day-to-day payments, because that is even more of it is just as much of a day-to-day activity as social media or human connection is, but it is so much more critical to your day-to-day life and your day-to-day actions. And so having a easy payments mechanism is actually a huge thing for user retention and user growth. The beauty of blockchain payments is that blockchain payments are from day one immediately global, permissionless, frictionless. And that's not something you see in TradFi rails, right? Like for me to send my grandma in China like $20 or something, like I wouldn't even think to do that because first of all, it would take 7 days for me. Well, it would take a day to get the wire confirmed at my own bank. It takes 7 days for the wire to make it over and get confirmed because of Dodd-Frank laws in the US to this Chinese bank. In the interim, it has to go through an intermediary bank, in which case it might get stuck there. And so I have to double check to make sure that hasn't happened. And then, by the way, I probably had to pay $35 to send this wire to China to even begin with. And so all of that is just so much friction that none of which exists in blockchain because blockchain is immediately global and frictionless. And so I think like payments is very important. And also, by the way, blockchain payments can be very powerful and disruptive.
Yeah, and you mentioned like the growth model next in terms of lack of bridges. If we see what happened with gaming, how powerful the distribution channel is, once those growth bottlenecks are unlocked, I can't wait to see what the data will look like after that.
Yeah, exactly.
So 3 pretty massive verticals here that kind of builds your thesis as well. You have community, you have gaming, and then you have payments and stable coins. So the financial rails there as well. You alluded to the fact earlier that value accrual to token is like a really important step in your assessment process. It's kind of the basis of fundamentals as well for a value investor. In what way do you anticipate value accruing to the TON token? How are you thinking about that?
Yeah. So the TON token is very similar to other L1 tokens. It's a gas token, so it's used for all transactions on the TON blockchain. The TON blockchain costs about 2 cents a transaction right now, and half of the transaction fees are all burned. So very similar to Ethereum, except Ethereum burns a larger proportion. There is a portion of transaction fees on TON that are burned, and obviously that helps reduce supply, and that value accrues to remaining token holders. I think about everything in terms of earnings power or and very specifically per share value, or in this case per token value. And so obviously as the token supply decreases because of burn, the value of each token goes up if the total economic value of the system stays the same. And so that's ultimately the value accrual ecosystem. That's ultimately the value accrual mechanism. What requires that for that to grow is we need to see more transactions, we need to see more economic activity, and that'll all translate into increased burn and increased value per token.
Yeah, that's really straightforward. Finally, just on kind of the due diligence process, no investment is perfect. No early stage company is perfect. There are always some shortcomings that you need to be okay with. So what kind of red or yellow flags did you identify during this DD and initial research process?
Yeah. I mean, I'd say there's some yellow flags, red flags that we initially in the diligence process that, we ruled out or got comfortable with. And then there's some that I think are just like known unknowns or unanalyzables, as I like to call it in my investment memos. So on the stuff that, seems to be risks or perhaps misunderstandings that we became a lot more comfortable with it is like, one, the Telegram relationship. A lot of people are confused as to why Telegram should care so much about time. We've done a ton of work understanding why it's so strategic to Telegram. And by the way, there's actually a very explicit economic alignment in terms of Telegram earning TON over the next 5 years if they can deliver on certain metrics for the TON blockchain ecosystem. So there's very clear economic alignment if you start digging in, and philosophical alignment. The second question is just that a lot of people ask about is, why can't we, like other mini apps that have found success on Telegram have actually been EVM based or Solana based, like the Telegram sniping bots. Why can't they continue to be successful? Why does TON have to be successful? And I think that as we dug in, the answer really is that, wow, the TON wallet is actually a new tab in the Telegram app. And that's just such a huge advantage. And so that plus the strategic alignment means that TON will always be advantaged on the Telegram platform relative to the other apps. Yes, Telegram is sort of a very open ecosystem that's open to everyone else building a TON. And so that is absolutely a risk, but how we get comfortable with that is very explicit strategic alignment and the fact that TON is a tab in your app. It's just, I cannot overemphasize how important user experience or UI is. And, people in their product designers will always talk about the per click conversion drop off, which is like how many clicks to get from A to B. Each click is 80-90% drop off for users. And so the fact that TON is only 1 click away versus every other app will have to be by definition multiple clicks away. And then the stuff that's maybe less analyzable or just like outstanding risks that we just have to get comfortable with is that, look, we're still super early. TON, when we were first looking at it, didn't even have a stablecoin on it yet. And so it's very much, and like I said, there's only one bridge that's the official TON bridge, but there aren't a lot of other third-party bridges yet. And so there is a lot of expectation or underwriting that, yes, all these primitives will be built eventually. They're not here yet, but they will be built. And we see probably a path to them getting built. And so it's getting comfortable with this is very early stage investing. And so you have to believe in things that haven't happened yet. And then the next is really around developer ecosystem and tooling. Look, the reality is TON is not EVM compatible. It's not Solidity. It's not Rust. It's written in FunC, which is really just a version of C. So plenty of developers know how to use C, but very few crypto developers are used to coding in C. They code in Solidity and Rust. And so there is this issue of how do we get developer traction? How do we build out the ecosystem tooling to make it easier for developers to come on TON to develop? Is the right strategy to just go directly to people like the whole universe of developers who already know C? And so, or is it to target crypto specific developers who know how to build crypto specific primitives? And so, that's definitely a risk that TON doesn't get there in attracting the right developers or building out the right tools. We hope that happens. That is, TBD and something that they need to work on. And then finally is just like it is very possible that this distribution doesn't pan out, right? There's a ton of execution risk getting from, what today is single digit millions of TON users to hundreds of millions over time. There's just a lot of execution risk, will require a lot of things to go right. And we're extremely early. And so we're sort of like eyes wide open that a lot of that could fall short.
And if we speak about numbers then, how are you thinking about the market opportunity for TON? So what's like the bull case and base case and valuation potential for this investment?
Yeah. I mean, look, ultimately, L1s are all about settlement layers for transactions. So it's all about how much economic activity can you get onto the blockchain and how much economic activity will get on the blockchain and settle on the blockchain. And so with TON, I think the math is actually, can be very straightforward and simple. The way that I like to frame it is, Telegram, I think over the next 5 years or the next few years can get to 1.5 billion users. That would be very reasonable in the context of their 900 million today, as well as, where Facebook and WeChat are, especially because Telegram is actually a very global app. So if we have 1.5 billion Telegram MAUs, assume that TON can get to a third penetration of that. You're looking at close to 500 million MAUs on TON. How much can they be monetized? Well, if we look at Facebook earning $45, $50 per user globally, in the US actually 90, but globally 45. WeChat earning 15 to 20. If you take some sort of haircut to that, what if TON could earn a $10 ARPU on users, right? Then you're looking at something like 500 million users times $10 ARPU. You're looking at $5 billion of revenue per year. These are payment settlement networks, high margin businesses, well, effectively 100% margin business. And so you can put a pretty large multiple on it. And so, 5 billion of revenue times a 30 times multiple gets you to 150 billion market cap potential while taking pretty large haircuts to the user and ARPU numbers. And so, at 150 billion market cap, you're looking at closer to, you can sort of take your assumption of what the token supply might look like today. Today it's around 5 billion shares. And so this could be $150 billion market cap, $30 token over time.
How actively are you at Pantera then working with the team building TON?
Yeah. I mean, look, we are very long-term investors. And so as long-term investors, I think a big part of our responsibility is to help create our own wins. Myself, as an investor, I've always been very involved. Even, a lot of people think public equities investors are totally passive. That's not the MO, and that's already not how I invest. It's really important to be involved with your management teams, whether they're early stage or later stage. I wrote a lot of activist letters, suggestivist letters, board presentations to help our teams because I think investors have a very unique vantage point. But let's talk to early stage though. As a large investor in the space, it's our responsibility to both educate those outside the industry, as well as importantly, to try to guide developments within our industry about where they think they should go. So we feel like we have those responsibilities to both parties. From the portfolio company perspective, we have a variety of talent across the Pantera platform that can help in a large range of areas. Whether that's our existing network of other portfolio companies, our relations with service providers, our tokenomics experts in-house, legal, capital markets, marketing, and different businesses need different things at different stages of maturity. And then, I think most importantly, beyond these very specific things is that we can do as investors to provide that investor lens of, management teams are very focused on day-to-day execution. They're maybe not tracking the larger industry or competitive shifts. And so it's our job as investors to help them see that because that's what we're focused on day-to-day. And then more importantly, management teams, especially in crypto and especially early stage, just are very focused on the tech and the product and maybe less focused on the capital markets piece and the monetization and the value accrual. And so that's where we come in with that, with our capital markets expertise, with our expertise as investors that like, this is what investors care about. And, this is ultimately what you should be getting to, because just as important it is to build a product that works, it's as equally important to have something that is commercially viable and like capital markets viable. Otherwise, you can't fund this product, and you can't build a viable business without both. And I think a lot of people maybe shortchange that and don't realize that how important the investor piece or how important the capital markets piece is to the success of any long-term business. Specifically to TON, what we're working on then is like a lot of is some of these pieces, but specifically addressing the risks that I just talked about. So one is developer experience. We're working with them deeply to help improve developer documentation, ensuring dev tooling companies to them. The second is just being their eyes and ears with developers. We collect a lot of feedback from all the applications across the TON ecosystem. We hear about what do they think is not working, what is working, what are they struggling with, or companies outside of TON thinking about building in TON, what do they need to see before they come. We collate all that feedback, give it to management, and do very frequent catch-ups with the TON Foundation, with that feedback, with that lens, just to be their sounding board, but also to help them, direct their product development over time.
That kind of support, I can imagine, is extremely valuable. And, on a mission as ambitious as the one that TON is on, they'll take all the support that they need. Thank you so much, Cosmo, for this overview of TON. Super interesting stuff, and great to get some further context to the announcement posts as well. There's a lot for people to digest here and understand about your process of due diligence and just in general how you're thinking about TON and the potential there. Just finally, I wanted to ask that beyond TON, is there anything that you want to touch on in terms of where Pantera is currently focused on, either building on this discussion, any of the verticals we touched on, or just something out of the blue?
Might be maybe a generic answer, but look, when people ask about our strategy, what we're focused on, I sort of always go back to the timeless truths of what like fundamental rigorous investing means, which is, we at Pantera are very focused on trying to invest in the highest potential blockchain-enabled businesses and protocols. This means we're looking for good protocols or businesses that provide a service that has product market fit, that is creating economic surplus, that has strong growth prospects, has a good, trustworthy management team, and importantly, has the potential to ultimately capture that economic surplus or some portion of that economic surplus. So, it's with that broad spectrum that we really invest across everything in crypto, and we're pretty open to anything. I think different people on the team have very specific views about which applications or infrastructure might be more value accruing than others. I personally have a very strong applications bias as a consumer internet investor, and perhaps not being smart enough to be an infrastructure investor. Our investments span across the blockchain spectrum. Places that I'm very focused on, or places that I think are high potential for creating profit potential, are block space. Very obviously, TON is an example of block space. Ethereum and Solana. Blockchains are all about selling block space, right? So that's the biggest market. Others I think are super interesting are DeFi, DePIN, very specifically, just these businesses that are using token incentives to incentivize real world behavior with real world businesses. I think DePIN is super interesting. And then maybe further out, not profitable today, but has huge profit potential eventually, is just the intersection of AI and crypto, and how blockchain can very uniquely enable a lot of AI use cases or enable AI acceleration and adoption. And so those are, some of the examples of places that we're looking.
Fundamentals matter. I will let that be the key takeaway. Thank you so much, Cosmo. I really appreciate your time today.
Great. Yeah, thanks so much.